All right, welcome to the Explainer. Today we're tearing into the Q3 2025 earnings report from Coinbase, one of the absolute titans of the crypto world. We're going to take this super dense financial document and turn it into a clear, visual story of what's going on with the company and maybe where it's headed. Okay, so before we jump into the juicy numbers, what are we even looking at here? Well, every public company has to file this thing, a Form 10Q, every single quarter. Just think of it like a mandatory, super detailed report card for the whole world to see. It's chock full of details on how they did, what they're planning, and this is the important part, what could go wrong. So here's how we're going to break down Coinbase's quarter. We'll start with the big, flashy numbers, then we'll dig into how they actually make their money. After that, we'll look at a really interesting acquisition they made. And we'll wrap up with the stuff that probably keeps their CEO up at night. Sound good? Let's go.
Okay, let's get right into it. We're starting with the headline figures, and man, do they tell a story. It's a story of some seriously explosive growth when you compare it to this time last year.
First things first, people. How many people are actually using this thing? Well, Coinbase now has 9.3 million users making transactions every month. That's a 19% jump from a year ago, which tells you one thing: more and more people are actively trading on the platform. Now, this is where it gets kind of wild. Look at the sheer amount of money they're responsible for. The total value of assets on their platform just skyrocketed by 95%. We're talking over $500 billion. So it's not just that they have more users, it's that those users are trusting Coinbase with way, way more of their money. And this is the payoff. This is where all that activity hits the bottom line. Net income, that's their pure profit after everything is paid for, shot up by an incredible 477%, $433 million for the quarter. I mean, that is just a massive leap in profitability. So when you lay it all out like this, side by side, wow, the picture is just crystal clear. It doesn't matter which metric you look at, users, assets, trading volume, profit, they're all pointing straight up. It was a massive, massive quarter for them. But where is all this cash actually coming from? How does the Coinbase money machine actually work? Let's peel back the onion a little bit, because understanding this is really key to understanding their whole strategy. So Coinbase basically has two main ways it makes money. The bigger piece of the pie, 58%, is still from their classic business, transaction fees. That's the little slice they take every time you or I buy or sell crypto. But look at that other chunk, 42%. That's from subscriptions and other services, and it's getting pretty substantial. Okay, now let's zoom in on just those transaction fees, because there's a really important story here. You see, regular folks like us, the consumers, still bring in the lion's share, about $844 million. But the real headline is the growth from the big guys, the institutional investors. Revenue from them grew at a much faster rate, a whopping 144%, mostly because they're hungry for more complex stuff like derivatives. And this quarter wasn't just about the business growing on its own. That incredible surge in institutional money, a lot of it was supercharged by a huge strategic purchase they made to go all in on that market. Back in August, Coinbase officially bought a company called Deribit. And listen, this wasn't just some small tech acquisition to add a new button to the app. This was a major power move, signaling a huge push into a much more complex and, frankly, much more lucrative corner of the crypto world.
So what exactly is Deribit? Well, it's one of the top platforms in the world for trading crypto derivatives. Think of those as financial contracts, like futures or options, that let big-time traders bet on where the price of something like Bitcoin is going. And right away, bam, this deal boosted their institutional business, adding over $55 million in revenue in just part of one quarter.
And if you want to know just how big of a deal this is for Coinbase's future, just look at this number. The company put $2.8 billion on its books for what accountants call goodwill. Now, that's a fancy term, but what it really means is they're placing a massive value on all the stuff they can't touch: Deribit's amazing technology, its expert employees, and its potential to make a ton of money down the road. Okay, we've seen the good, right? The explosive growth. Now it's time to look at the other side of the coin. The 10Q legally forces companies to list out everything that could possibly go wrong. And honestly, this risk factor section is often where you find the most revealing stuff. Number 1 with a bullet, regulation. I mean, this quote from the report says it all. The rule book for crypto is basically being written as they play the game. This creates this constant, massive cloud of uncertainty that hangs over their entire business. Next up, cybersecurity. And this is a huge one. When you're holding over $500 billion of other people's assets, you paint a giant target on your back. The report makes it clear they are under constant attack from sophisticated, well-funded groups and even state-sponsored actors. This is a 24/7 battle for them.
And finally, there's just the risk of the platform itself breaking. This quote highlights that any big outage, whether it's from an attack or just a technical glitch, could be absolutely catastrophic. It's not just about losing money in the moment, it's about damaging the trust that their entire brand is built on.
So, to wrap it all up, the story of Coinbase's Q3 is really a story of a delicate balance. On one side of the scale, you've got this absolutely explosive growth and a multi-billion-dollar bet on the future of finance. But on the other side, you have these incredibly heavy weights, regulatory chaos, and the constant threat of cyber attacks. The company is firing on all cylinders, no doubt about it. But they are operating in the shadow of some very real and, frankly, escalating challenges. So the big question this whole report leaves you with is pretty simple. Can all this incredible momentum actually outrun the enormous risks that are chasing it? That, right there, is the billion-dollar question.